Your mortgage guy Brian here with another important video to help you navigate the mortgage process. I want to continue my conversation from the last video, which was all about DTI, or debt to income ratio. This is one of the factors that an underwriter is going to look at to determine whether or not you qualify for your mortgage. Now, remember, why is this important? This is great information to know before you go out looking so that you don't waste your time wondering if you're going to qualify. This way, as a borrower, you know right up front, hey, I'm going to be good to go on this mortgage. Now, in the last video, we talked about the components of DTI. Today, I want to look at how do we calculate your DTI. And specifically, we're going to look at that back end ratio. That's the one that underwriters are really going to be paying attention to. Remember, we want our back end to be lower than 45 on a conventional, lower than 50 on an FHA. They're not, black and white. Depending on other components, you could go a little bit higher and still be eligible. All right, so let's take a look at my borrower. Remember, this is the same borrower as last time, buying a house for $575, putting 20% down, and they were at a 7% interest rate. The back end ratio is made up of your mortgage plus the sum of all of your other liabilities. So their mortgage, their PITIA, principal, interest, taxes, insurance, and assessments, on this loan is going to be $4,252 a month. Now, what are the other liabilities? Other liabilities could be things like student loans, car payments, credit cards, any other liability that you are obligated to pay on a monthly basis. There's student loans. They have student loans. They had them deferred. Even though they are deferred, we still have to count a monthly minimum liability against you because the government could come back tomorrow and say, hey, you got to start paying again. So for qualification purposes, we do count a certain percentage of the total amount. So they had about $250 a month in student loan liabilities. Car loans, car leases, two different things. A car loan, right? You own the car. A car lease, you're essentially renting the car for an extended period of time, and then when the lease is over, you can choose what to do with it. Their car loan, they were going to own the car, was $350 a month. Now with a car loan, not a lease, but a loan, if you have less than 10 months remaining on the loan, we actually can exclude that liability. It's a nice little trick for those that are kind of tight in qualifying purposes. The last one was credit cards. Now my borrowers, really great. They pay off their credit cards every month down to a zero balance. However, when you get that statement, there's that little thing at the top that says minimum amount due. If you're one of those people who only pays that amount, even if you pay it down to zero, we have to account that liability against you. So they had 4 credit cards, $40 a month monthly minimums, it's $160. So what we're going to do to calculate their back end ratio is take their PITIA, their mortgage, and all those other liabilities, add them together. And we're going to divide it by their gross monthly income, right? So my borrowers, between my two borrowers, their gross monthly income was $13,333. We take liabilities divided by gross monthly income, and we got a DTI of 38%. Obviously, 38%. Lower than 45. My borrowers felt confident going into this offer that they were going to be approved when it comes to their ability to repay. That's where that DTI comes in. So this is important because you want to know what your DTI is before you decide how much can you spend. If your DTI is up in the 45s, 50s, 60s, you're not going to be able to afford that much. You got to lower your purchase price or increase how much you put down. So with any other questions, if you want more information about DTI, make sure you leave a question below and I'll be happy to address it. Or you can reach out to me at yourmortgageguybrian.com. Follow me at yourmgbrian. Make sure you subscribe so you can get access to all of my other videos when they come out. And make sure to leave any questions about any topics in the mortgage industry that you have in the comments or message me directly.